All right, three things in 3 minutes. Let's get it. So, there's a script making the rounds online, and it might be one of the smartest ways that I've ever heard for someone to handle the why should I pay you 3% to sell my home when somebody else offered to sell my home for 1.5% question? Most agents panic and start listing features. I do drone videos, open houses, YouTube ads, but that just puts the seller in the mode of logic. This script does the opposite. It's called a pattern interrupt. The agent should just calmly reply, is having a strong negotiator important to you when selling your home? The answer is almost assuredly going to be yes. Then the follow up hits. So, how do you feel about the fact that the other agent already lost their first negotiation with you and you're not even in the industry? Boom. The seller stops. They think, that's the pattern interrupt. Their brain was heading towards cheaper is better. And now they're asking, wait. Am I about to hire somebody that folds at the first ask? That's not a logic battle. It's an emotional realization. And that's why it works. You're not defending your fee. You're helping them rethink what it means to negotiate. All right. If you guys follow me, you know I do a lot of the buy before sell transactions. These are what I call the two home tango of helping people navigate the delicate dance of buying a home when they already own their current home. And one of the biggest hurdles that I see is coming up with a down payment for the new home before you've sold your old home. If you want to avoid super expensive hard money loans or having to sell first, this is a big piece of the two home tango. Now, typically, you've got three options. One, use your own funds, checking, savings, stocks, investments. Number two, get a gift or a short-term loan from a family member or friend. And three, a home equity line of credit. But here's the catch. Most home equity lines of credit or HELOCs take 30, 40, maybe 50 days to set up. And that's tough on a tight timeline. But that's where this new Flex HELOC comes in. It's a newer product. I've used it several times this year, and it closes in as little as 7 days. So because it uses AI and technology to assess the home value, income, credit, it gives a very fast approval so that you can access equity from your home without having to take out a super expensive bridge loan or missing out on an opportunity. So it does cost a bit more than a traditional HELOC, but I've seen clients save thousands because they can use this rather than a hard money bridge loan. So if you have a client trying to buy before sell, make sure you mention that this is something that's out there if they're in a pinch and need to get into the equity of their home to be able to move forward. Finally, let's talk about mortgage rates. So after hovering around 7% for much of May, we've seen rates dip a little bit this week. We're talking about 6.875 or so on a 30-year fix nationally. And that's due to the fact that we had a softer than expected jobs report earlier this week. Now, today's unemployment numbers actually are about flat from last month, which is a little bit better than expected. So we'll see how that plays out. There's some mixed reactions in the market right now. But what we're seeing is kind of more of the same. Rates just above or just below 7% nationally. And we'll have to watch what happens going forward. All right? Y'all got this.